There we go. All right. Shall we get started? Yes, let's get started. Love that. Here we go. 3 at 3 is presented by me. I am John Najarian. I've been a trader for 38 years. My brother Pete and I co-founded Market Rebellion. And what you're about to see is the fruits of our labor. Take a look. But before I start, everything I'm describing for you is for educational and informational purposes only. Full stop. You want to learn more? You're just getting started in trading? Go to marketrebellion.com/get started. That is marketrebellion.com/get started. All right, just getting one last fill here. Let's see here. Bang, bang. Yeah, I say that all the time, don't I? Bang, bang. All right, let's get to it, shall we? You want to learn more about stock, options, futures, cryptocurrencies? Go to marketrebellion.com/get started. All right. Well, by the way, a lot of you note with sometimes disdain and sometimes love that I like that expression, bang. And as you may have seen on the halftime today, I used it several times. I didn't say bang out loud, I don't think, but I did this. And somebody on Twitter reached out to me and said, Doc, I don't think it's appropriate with 20 million people out of work that you're, cheerleading. And I'm like, we weren't talking about 20 million people out of work. We were talking about stocks and what I'm buying and selling. That's why they have me on that show. I'm not Dr. Fauci. And do I have empathy? Do I have sympathy? I have both. If we are indeed talking about cases of people with COVID, I am a very heartfelt, I hope you get better soon for those people. For those of us who have lost someone, which I have, that I knew very well that had COVID, of course my prayers go out to that family and for that person. But CNBC, for the most part, guys, is business television. That means we talk about what's going on, like the headline you see right there, Central Florida Outback Steakhouse remains open after workers test positive for COVID. Now, that would be a negative headline. We did not comment on that headline today, but that headline was also from yesterday, and that was why the stock had traded down today and broke $10 a share. So that would be something appropriate for me to talk about. And indeed I did. In fact, this was my final trade, because they stepped in as the stock broke down and they bought July 10 calls. And then they stepped in and sold July 12.50 calls against it. Now, when you do that 1-to-1, that is what's known as a call vertical spread. So if you paid $87 or $95, because every option is for 100 shares of stock. So if you paid, let's say, $95 for each call, those July 10s, well, and you collected $14 for each call that you sold of the July 12.50s, you would reduce your cost of your ownership between 10 and 12.50, which is now a 1-to-1 spread. You have the right to take it at 10. You've given somebody else the right to take it from you at 12.50. So if you did 95 minus 14, you'd be at 81 cents for that spread. That spread can go to $2.50. So in other words, a triple from 80 to 250. Let's call it a triple. That is what somebody pretty big did in here. So that's what I did in here. And it's already working. Why? Because stock is $10.75. So when I look at that, folks, and let's see what those $10 calls, they're obviously worth 75 cents right now. How do I know? Because the right to buy it at 10 is worth 75 cents if the stock is trading $10.75. So they're worth 75 cents right now, this second. And let's see, BLMN. Where are my calls now? Where are my calls at? There we go. So those July, and these are regular July expiration calls, those regular July 10s are trading for $1.25 to $1.30. So I'm already up money here. Even using my example of paying 95, selling them at 14 cents. Now I got in better than 95, but I did sell them for 13 cents, the other ones. And why did I sell them? Well, because this is a short-term trade. Theta, or time decay, is extreme in short-term trades. This is a trade that will be on my sheets from now, the 1st of July, perhaps until next week or the week after. And that means we're at the most rapid part of time decay. That's my dog, not me. The most rapid part of time decay is in these final 2 weeks. We're right there right now, because tomorrow is the first expiration in July. These were not that. These are the regular July expiration, which means they expire in 2 weeks. All right, let's get to our second of our 3 at 3, shall we? But before we do, Pete and I have been in this business for a long time. We can teach you everything you need to know about trading options, trading stock, cryptocurrencies, and futures. You want to learn more about it? Go to marketrebellion.com/get started. You'll get exactly what I just laid out for you as far as that call vertical spread, 1-to-1 spread, where you have no additional risk and you take down both risk and time decay, as well as volatility compression. Netflix. All right. Netflix, NFLX. This one worked out like crazy. And so to all of you who don't like it when I do this, I'm going to do it again and again because I love it. Netflix, folks, when we saw it this morning, as you can see, just during the halftime report, with 12:18 was the time, we posted this with Netflix at $477.20. We said somebody is buying next week, July, 500 calls. Turns out we had a question. Thank you very much, because we appreciate when you guys interact with us on Twitter, when you interact with us when we do Zoom conferences and things like that. We appreciate it. The question was from Sam. What do you think, John, of Netflix? You've been long it for a long time. Do you think you would continue to own it through the pandemic? And I said, yes. But in particular, Sam, I saw unusual activity in here today. During the show, I saw unusual activity in here. At the 500 strike with the stock at 477. How much did they pay? They paid $1.10, which is $110, since every option is for 100 shares of stock. And they bought them all the way up to $4.30, which is $430 per option. Now, think about this, all you Robin Hoodsters, as you're trading it. You guys, I think, are probably very aware that when you're trading Netflix, a 1,000-share position would be $477,000. That's a big chunk. I don't know if there's a lot of accounts at Robinhood that have 477,000. I know there are some, but a lot of you have accounts that are a lot smaller than that. So how could you control a $477 stock and make more than just, enough to buy a couple sodas or something? Because if you buy one share, not 100 shares, but one share, it's $477. If that one share goes up, which it has, because Netflix went to 483, right now it's 485. If it went to 483 from 477, that is $6. So like I say, okay, great. You bought one share with 477 bucks. That means you got enough for a latte and maybe a muffin, right? So on the other hand, for $110 or as much as $430, you could control 100 shares of stock. So that means for a 10 lot, which would be 1,000 shares, for $1,100 all the way up to $4,300, you could control 1,000 shares of Netflix. 1,000 shares of Netflix for not $477,000, but for $430 $4,300. That's 1,000 shares. Now, a 10,000 lot, which I did more than that, but a 10,000 lot would cost you $43,000 in option premium if you paid $4.30. I got them for less than that. And it's not always that I got them for less than that. Sometimes I have to do another trade because my own subscribers race ahead of me as we post this because we give them the first shot to get in, and then 15 minutes later we trade it, if we're in the trade at all, because sometimes, as you can see here, they ran it. They ran it from $1.10 up to $4.30. Where are those calls now? You're probably asking, because the stock has moved up to at least $483 from $477, and those options, which expire next Friday, which is the 10th of July, and again, I'm just going to let you know that the reason that tomorrow is expiration is because we're going into a holiday weekend. Into a holiday weekend, we have a day off on Friday because the 4th of July is, of course, the 4th of July is Saturday. So when the 4th of July falls on Saturday or Sunday, they have a choice. Do they want the holiday to be on Friday or do they want the holiday to be on Monday? Now, this year they decided that the holiday would be Friday the 3rd. So for that reason, we don't trade on that day. Markets are closed. So anyway, so where are these 500 calls trading right now? The July 500 calls are trading for $6. And that is the high of the day right now. So if you bought them at $4 and they traded to $6, you made $2 per share, which since every share is for 100 shares of stock, you made $200 on that, which is pretty nice. So in other words, you turned a $400 investment into $600, a $4,000 investment into $6,000, a $40,000 investment into $60,000. Bang! That's what I'm talking about. All right, let's get to another. Can't wait. Third of our 3 at 3. There's Netflix, by the way, on that tear, as you see it. Moving up through 470, through 460, then 470, and then 480. Bang! That's a one-day chart you're looking at there. Third and final trade, ROKU. Okay, ROKU. Folks, if this kind of stuff doesn't convince you that you should be a subscriber, I'm happy to share this stuff with you at 3 at 3. However, if you were with us when we saw this at 10 a.m. today, you might have got in for $2 because next week expiration, July 130 calls, 4,000 of them traded for $2. What's $200? Because every option's for 100 shares. What is $200 times 4,000? It's $800,000. When somebody shoves $800,000 across the table in Vegas, do you pay attention? I do. That's what's happening here. Somebody pushed $800,000 across the table, said, ROKU, I'm in. Why did they do it? Well, you know, one of the reasons that I described was that Peloton is now on the ROKU. So if you're somebody that has a ROKU and all of a sudden you're looking at all the different things you can watch and all of a sudden you go, oh, Peloton, I've always wanted to work out with Peloton. And I have my TV set up in front of my bike as it is, whether you have a Peloton bike or not. Oh, I could put it on Peloton. So that's part of the excitement about this trade. You want to see the rest of the excitement? Let me show you. Rest of the excitement is that. So as you can see, early in the morning at 8:30 in the morning, the options were $1.12. Then at 8:35, they're moving up to $1.40. Where are they now? Well, just before we went on air, they had moved up to $5.20. In other words, you took a trade, perhaps, let's say you got in at $2, and let's say you got out at $4. You didn't even hold on until here. Now, I am lucky enough that I took money off the table because my discipline, folks, is that when an option doubles, I take off half, 50%. Why do I do that? Because I think you have to be disciplined about taking profits the same way you are about cutting losses. Do I have losses? Every day. But they're small. Why? Because I cut them. So for instance, my discipline is that if this trade, if I paid $2, which is approximately what I paid $1.85. But if I paid $2, just to make it easy, I would cut this loss at $1 because I'm saying, wow, this thing's just not working. Whoever bought these 4,000 contracts pretty quick, I don't know what the problem is, but I'm not making any money here. I think I'm going to cut it and move on to the next trade. So that's what I do with losses. This is a gain. As it moved up from $2 or $1.85 up to $4, I took off half. Why? Because by putting that money in my pocket, I am disciplining myself on profits, not just on losses. Too many people just focus on cutting losses, and too many people think that, oh, trees grow to the sky. They don't. I take profits all the time, and I write aggressively other options against it. So, for instance, you or somebody who was long ROKU could sell. Let me just pull it up and see what you could get for them. ROKU. So these calls, the next week expiration options in ROKU that were trading for approximately $5 when we began the podcast, or right here. Let's see. Those 130s that traded up through 5 are right now $4.70. You could sell, so if you were like me, if you bought them for, let's say, $2, and you said, you know what, I think it's going to continue to run, you could step in here right now, folks, and sell the next Friday expiration 135s against the ones that you own. As long as you do it 1-to-1, there is no additional margin, zero additional margin. So if you did that, you could collect right now $2.95 for selling these 135s. So if you're like me and you own them from $1.85 and they've gone up in value to $5, I could take some of that off the table, which, as I've said, I did, and I could sell calls against it at any strike higher than where I own it, where I have the right to take it. So in other words, if I have the right to take it at 130 and I sell the 135s for $2.95, I just did that $5 spread for $1 credit, didn't I? Because I took it for $1.85, and now I just collected $2.95. So basically $1 in my pocket as a credit, and I still have upside between 130 and 135. Bang! There's ROKU right now, as it's moved up $12 today on that Peloton news. Not a bad day, folks. So again, turn your head if you don't want to see it. Bang! That's what I'm talking about. You want to see more? I'll update this tomorrow on the Halftime Report. You want to learn more about unusual option activity? Check out marketrebellion.com/UOA. Keep in mind, we are following the smart money. Wherever I see somebody pushing 800 grand across the table, $1 million across the table, that's where our traders, that's where our followers, our subscribers want to be. We're following the smart money. And if you want to follow the smart money, check out marketrebellion.com/UOA. Bang. Thank you, folks. I hope you have a great day. I'm going to get back outside and enjoy it. I hope you do too. And we'll see you tomorrow on the Halftime Report.